Hawkish J Powell commentary crashes the market. Big Red Mike Day today. Yes, the FOMC took a less aggressive hike with only a 50 basis points raise versus the 75 they've been used to, but the commentary proved quite hawkish, meaning that the feds are not interested in making free money yet. Free money, aka lower interest money, allows retail and institutions to pour gas on the fire by adding leverage to the crypto ecosystem. Let's see what the pros are saying here about this whole commentary. One of the reports that I do read quite a bit is this DGens reports, which is put out by OSF and Mando. I think it's OSF. He writes it every morning, and it's always in your inbox. But he thinks that payrolls is now going to be this to start to claim the number one spot for the biggest data point. J Powell made it clear in his report. You can see it right here. So what does that mean? Everybody's been focused on all this CPI numbers, but I think it's going to start being that. The bigger question that he's asking is, when are they going to start to cut rates? You see that here. J Powell saw how aggressive markets moved 2 weeks ago on his commentary. So he wants market stability. He doesn't want pampa. You know what I mean? He doesn't want stocks to surge 5 to 10%. He's not talking about going to the moon. He's not talking about ApeCoin blasting off. He wants stability, and he reiterated that inflation was not down to a level where he wanted it to be by year end. Shit. So that kind of puts into perspective what he's looking for. Wizard of Soho, he says, quoting J Powell, no rate cuts in 2023. LOL. He's calling that bluff. I remember transition inflation and no rate hike speech very well, sir. Apparently this happened in the past. Always interesting to talk and listen to people that have seen this happen before. We're seeing a big change in the bond market here. Powell is being moved by the bond markets right now. They think dovish or less hawkish. Stocks still thinking hawkish. One of my favorites, he said that J Powell didn't come out with a Santa hat or tie. We're fucked. Listen, it's quite interesting to see how these big, huge macro environments actually affect the crypto ecosystem. So we've seen there's two main contributors here. We got the macro events going on, and we got lots of these black swan events that have happened. You know, we're looking at the Lunaterra episode back in, I think, May, June-ish, and then we had, FTX was a big black swan event. Do we have any more of those in the back pocket? I sure hope not. That's what's really crashing some of our system right now. And then we have we still have some of this grayscale stuff that we don't know about, so we got to figure that out. Binance FUD. So once we kind of get rid of all these over leveraged companies, and we start seeing interest rates either top out where he's not raising them anymore, I think we're going to be in for another little bit of a crypto winter. I think sort of about another 6 months. I mean, this is not financial advice. I wouldn't listen to me if I was trying to invest. Yesterday, someone was talking about, hey, if I had $1 million to put into crypto, where would I put it? I was like, man, I don't know. What's your risk profile? Don't listen to me. Well, I just want aggressive growth. I said, well, I buy altcoins. But he didn't know much, so I said, I don't know, man. Tough to say. What do you want? But either way, you know what we do? We do keep track of all of the metrics in our crypto market summary. We do that a little bit every day. We see what the prices are looking like. We see what the bond market's doing, what the commodity prices are doing, trying to get a gauge of what inflation is going to look like in the future. So we're going to keep doing that. We're just going to keep a finger on the pulse. You know, education is one of the keyest points in this whole system. And that's what we're here for. We're here to look at everything that's going on. Hope you guys are enjoying all these random images and finding on Twitter here. So, but listen, we're going to jump into the crypto market summary here, where we do track all that metrics. If you do enjoy the content, hit that subscribe button. Really appreciate it if you did. Every day we just look at whatever's affecting the crypto ecosystem as it comes to, cryptocurrency, NFTs, DeFi. We don't cover a whole bunch right now. We do kind of see it on the auxiliary when we do see some of these centralized exchanges. When they go down, we do see. We typically look at all the reactions of all the people just doing one of these, pointing at everybody else. But I kind of want that spidey sense there. So, and part of that spidey sense is looking at what's actually working. Some parts of the stuff that's working is the DeFi ecosystem. So a little bit to look into there. Uniswap, DYDX. Those are a lot of decentralized, all run by code. No people making human decisions. Anyways, we're going to jump into this thing. I'm going to just pop this up here. I mean, look at this. We're seeing a big downward trend coming here since the announcements. It's no surprise here that on December 15th, basically the whole market cap of the crypto ecosystem is down another 20. Is that 20? Yes, 20 billion. Prices are down. We're going to look at shit coins here. Shit coins are just new coins that are getting put on, typically made of memes. So 2.1 million in volume of shit coins. Not too bad. Any funny ones in there? No, essentially not really a lot of good ones going on. Kind of weird. Trump, Macron, bunch of leaders. It's kind of weird. Ethereum, and now we're going into the Binance side. So 1 mil. 1 mil, and what is that? 7143. So pretty small over there. So NFT marketplaces, we look at these top ones up here. Yesterday we had $42 million in volume. Today we got 35. Those are still pretty high numbers, and it's all being led by Blur. You can see the Blur ecosystem. They are they're doing the airdrop, so they're looking to pump volume through there. I don't know. It's tough to see or to know why that's so high. Commodity prices, what are we looking at here? Oil still ticking up. Gas prices kind of ticking up again. That one's down a little bit. Uranium prices coming down. The bonds, the 2-year came up a little bit. The spread increased again, so we're looking at it's pretty steep here. 30 years at 3.5, yeah. So this is kind of what you're seeing for interest rates after the big Fed announcement. And we're going to jump into the NFT marketplace. So we're looking at on the 15th of December here. Some of the floor prices of all these NFTs that we're tracking is down a little bit. I wonder what that is. So we're down an ETH on CryptoPunks. What are we seeing here? There's a couple. So what is this? Artifact, they're the same. Jennies are down. Cyberkong Genesis are down. Okay. What do we got here? Cyberkong VXs are down. Rug Radios are down. Rec Guys are down a little bit. Ether Orcs are back up to 0.32. I didn't get my bid filled yet. I still got that one kind of put out there. Consortium Key is up, and that's we're seeing just a little bit down. It's just the smidgens everywhere. Yeah, smidgens a real word. That's what we're looking at. So we'll keep this going. We're gonna keep looking, seeing what's happening here. We got to keep an eye on this NFT marketplace volume because that's going to be one of the bigger ones to keep an eye on. Because I don't know, like if that just keeps trending upwards, and especially if OpenSea starts trending upwards, then we got some cool stuff to kind of talk about. We'll see some NFT collections start booming, and those NFT floor prices that kind of index some of the floor prices. We're going to see that popping up a little bit here. So stay tuned. Appreciate you guys listening. Have a good day.